Cardinal Token. Hello, everyone. Welcome to Cardinal Token's News Flash. Coinbase reports net income of $433 million for the third quarter of 2025. The company's revenue reached $1.87 billion in the third quarter of 2025, compared to the projected $1.8 billion. Coinbase also announced it purchased $299 million worth of Bitcoin during this period. There is now a 62% chance that Bitcoin will fall below $100,000 before 2026, according to Polymarket.Bets. The ECB says a digital euro could be launched by 2029, and its development is expected to cost $1.3 billion. According to Bloomberg sources, preparatory work is expected to continue at a meeting this week in Italy, with the hope that a legal framework will be adopted by lawmakers within the next 4 years. Currently, only 3 central bank digital currencies, CBDCs, have been officially launched in Nigeria, the Bahamas, and Jamaica, according to the American think tank The Atlantic Council. According to Sam Bankman-Fried, FTX was never insolvent. The $8 billion in customer assets owed when FTX filed for bankruptcy never left the platform, and all customers will receive refunds ranging from 119% to 143%, with approximately 98% of creditors already paid at 120%. After covering $8 billion in debt and $1 billion in legal fees, the bankruptcy estate still has $8 billion. They detail FTX's current assets, which are estimated at $136 billion. ZachXBT reminds him that FTX's creditors were repaid based on November 2022 prices rather than current values, which caused significant losses for holders of assets like SSOL and BTC. Fed signals. End of QT. Implications for Bitcoin's future. On October 30th, 2025, the Federal Reserve's announcement signaling the end of quantitative tightening, QT, has raised eyebrows across the financial landscape, particularly within the cryptocurrency sector. Historical data suggests that similar pivots have led to significant market reactions, notably Bitcoin's steep decline of 35% following the Fed's cessation of QT in 2019, coupled with subsequent interest rate cuts. The decision to end QT typically reflects a shift towards accommodating monetary policy, which can influence investor sentiment and risk appetite. As traders and analysts digest this latest development, concerns are mounting about the potential for Bitcoin to experience a similar downturn in the coming months. The prevailing fear is that the end of QT could lead to a bearish phase for BTC, reminiscent of past market behavior. While the broader implications of the Fed's policy shift are still unfolding, the cryptocurrency community remains vigilant. Market participants are closely monitoring macroeconomic indicators and Fed communications for signs of how this change might affect Bitcoin's price trajectory. As the landscape evolves, the intersection of traditional monetary policy and digital assets will continue to be a focal point for investors. Understanding these dynamics is crucial for navigating the complexities of the crypto market, especially during periods of significant policy shift. Bybit pauses new user onboarding in Japan amid regulatory changes. In a significant move, cryptocurrency exchange Bybit has announced the suspension of new user onboarding in Japan, citing the emergence of new regulatory frameworks. This decision, effective immediately, comes as Japan's Financial Services Agency, FSA, deliberates on reforms that could potentially allow banks to hold Bitcoin and operate licensed exchanges. The FSA's consideration of these reforms marks a pivotal moment for the Japanese crypto landscape, which has been navigating a complex regulatory environment. Bybit's decision to halt onboarding reflects a proactive approach to compliance amid shifting regulations that could reshape how digital assets are managed within the banking sector. While details surrounding the specific implications of these regulatory changes remain undisclosed, the move underscores the growing scrutiny that cryptocurrency exchanges face in Japan. As the FSA seeks to enhance its regulatory framework, Bybit's pause highlights the delicate balance between innovation and compliance in the rapidly evolving DeFi space. This development is significant not only for Bybit, but also for the broader cryptocurrency market in Japan, as it signals a potential shift in how traditional financial institutions may engage with digital currencies in the near future. As the FSA continues its review, stakeholders in the crypto ecosystem will be watching closely to see how these regulations unfold and what it means for the future of trading and investment in Japan. Ethereum struggles. On-chain activity and futures demand signal potential drop. As Ethereum grapples with market volatility, recent data suggests that the second largest cryptocurrency by market capitalization is facing significant headwinds. On October 30th, 2025, Ethereum's price exhibited instability, raising concerns about its ability to maintain the crucial $4,000 threshold. Current market analysis indicates that weak on-chain activity and diminished demand in the futures market are contributing factors to this bearish sentiment. Analysts are closely monitoring these trends, as they could pave the way for a potential decline to $3,500. The lack of robust trading volume and investor confidence has left ETH's recovery in doubt, prompting questions about the sustainability of its recent price movements. The implications of these developments are noteworthy for stakeholders within the Ethereum ecosystem. A sustained drop below $4,000 could not only affect investor sentiment, but also impact broader market dynamics, especially as the cryptocurrency space continues to evolve. As the community watches closely, the focus remains on how Ethereum will navigate these challenges in the coming weeks. Spot Ether ETFs outshine Bitcoin in Q3, signaling institutional interest in altcoins. In a notable shift within the cryptocurrency landscape, Spot Ether exchange-traded funds, ETFs, have outperformed their Bitcoin counterparts in inflows during the third quarter of 2025. This trend suggests a burgeoning institutional appetite for regulated altcoin investments, a phenomenon that analysts believe could herald a new era for digital assets beyond Bitcoin. Data reveals that Ether ETFs have attracted more capital than Bitcoin ETFs, a development that may reflect a growing confidence among institutions in the potential of altcoins. As the crypto market matures, the emergence of these regulated investment vehicles is likely to facilitate increased participation from institutional investors who have historically been more cautious about venturing into the altcoin space. The implications of this trend are significant. Analysts suggest that as institutions embrace altcoins like Ether, we may witness a corresponding rise in the legitimacy and acceptance of these assets within mainstream finance. This could lead to a more diversified crypto market where assets beyond Bitcoin gain traction and recognition. As the crypto community watches these developments unfold, the increasing interest in altcoin ETFs could reshape the investment landscape, encouraging more traditional financial players to explore opportunities in this dynamic sector. The evolution of institutional investment strategies in the crypto space remains a critical narrative to follow, as it could redefine the future of digital currencies. The Fed will print $1.5 trillion after today's rate cut. The crypto market is about to go parabolic. I am not just another digital asset, I am a vision, a union of strength, a second chance for all those who once believed, who fell, yet refused to give up. Cardinal Token, I will be available soon.